Kevin Green is here with me in studio, our senior markets correspondent, and Diane King-Hall joins us from New York, senior markets correspondent as well. Hey, KG, we faded a little bit there. That was kind of our options discussion, which was that there was a little bit of kind of creep there on the sell side. Folks are bracing a little bit more on the lower end.
Yeah, we saw the put flow going into the 55-35s. You know, it was highly unlikely that we were going to get down to that level, but we just saw some bearish put flows. And so the market did sell off here a little bit, but as we get Google earnings, obviously things can turn around in the future session here. So, you know, once again, it was kind of a churn type of event here. We saw some vol compression, and I think we'll probably continue to see that vol compression actually occur here until we get some earnings data coming out, not only but for Texas Instruments and others.
Yeah, Texas and Alphabet out first, and Alphabet going to be the more important one. Up, then down, then basically to the side. Texas Instruments looks like it's a pretty solid rally. So let's talk Alphabet first here, as shares ended the session around 182, just shy of it. Their revenue for the second quarter did hit above expectations, but a meager beat of about $200 million, meager by their standards. 84.74 billion versus 84.4. Earnings came in 5 cents ahead on a trailing basis. $1.89 beats 184. YouTube, I'm kind of surprised that YouTube missed. Their ads revenue was 8.66 billion compared to the street's estimate of near 9. So I guess analysts got a little bit overzealous on YouTube. For those that look at the ex-traffic acquisition costs, Alphabet reported 71.36, which is a little bit more of a notable beat to the 70.7. Shares coming off a tiny bit, Diane. You know, it's not a bad report, but it's also not a mega beat by any means.
No. And look, I think you teed this up in your segment coming into our analysis of these earnings as they're coming out, because, look, they crossed the bar majorly in their last quarterly report. It's hard to kind of beat that. I mean, they had their first dividend that period. We saw the stock spike then. And so the outlook was high for Google, for Alphabet rather, in terms of not just like what it was going to look like on EPS or revenue. As you mentioned, they beat there. But what does the ad spend look like? What does the ad space look like, especially the potential for how that could look for, say, Meta as well, which we know it competes for some of those ad dollars. And then also, I know the street wants to see more about what does the revenue growth picture look like for this AI investment that so many of these mega cap tech companies are investing in. They want to see more meat there. So that's going to be kind of one of the concerns that we'll probably want to hear more about on the earnings call this afternoon.
Yeah, cloud revenue, 10.35. That's a nice beat. That should help as the stock starts to turn around a little bit. By the way, keep in mind on the subject of cloud, the fact that Wiz rejected their $23 billion offer, which also broke earlier today, that might be something too. As we're thinking about cloud. The cloud number, definitely the best part of this report, it seems like, KG.
Yeah, and it wasn't that much of a beat either. I mean, it's $200 million, I would say, give or take. So, I mean, you're talking about maybe a week's worth of revenue there. But, you know, I think they came in line with estimates. I think analysts might have gotten a little bit ahead of themselves, right? They were kind of on the ball when it comes to this particular number. And the YouTube side of their business is actually not surprising. We have seen weakness when it comes to their business there. They've been trying to capitalize on the short form, YouTube Shorts and things of that nature, and that seems to be very popular. But you're starting to hear a lot of content creators getting a little bit more frustrated that they're not really pointing towards that long form content, and that might be cannibalizing their viewership there for a little bit there. But
that's a really good point. Because as a creator, I've kind of wondered that too. Yeah. You know, like our shorts versus our long ones.
Yeah. No, I mean, I watch YouTube literally every day, and you actually hear that type of commentary. So let's look what the guidance is going to be moving forward here. We'll get that on the conference call, high level, and then they're going to talk about the environment that they're currently in right now. And then last but not least, we'll get the numbers when it comes to their guide, if you will, when it comes to CapEx spend, right? And everybody's looking at that, not only just for Google, but also for NVIDIA and some of the small cap trades that are out there. Last thing I will say, though, it's a decent report. I would say it's more in line, but you're not seeing the AI impact.
Yeah, you're really not. I mean, the outlook analysts expect the next quarter to be some revenue contraction. and then basically single digit. So that's why the company is so much cheaper than everything else. But it still has pretty good quality of earnings here and cash flow and profitability, and after the dividend too, it really stands alone. I'll give you a quick thought, Diane, if you want. We've also got Tesla out though.
I know, I just saw that. So, and it looks like it's a mixed bag there for Tesla. Adjusted EPS 52 cents a share. That's a miss. The expectation was 62 cents a share. It did be on revenue at 25.5 billion. It just kind of goes to show when we're thinking about Tesla, because the question has come up throughout this year is, should it be still a member of the Mag 7? And, it just goes to show what the expectations for versus what the reality is for Tesla. It just remains like there's still question marks there. I know KG talked about earlier just how the retail investor community really, really loves this company. But, there are just overhangs around Tesla that it's difficult to get away from.
Yeah. This is, there's a few things in here. I mean, this is what makes Tesla fun, of course. They're saying that the Cybertruck's on track to be profitable by the end of the year. I mean, that seems pretty good. A lot of people said that was going to be kind of a debacle for them. I think it's gone pretty well. I saw a red one here in Chicago last weekend. Pretty sweet. I mean, you're seeing it more. It seems like it's going pretty well. I know that's not a big part of their story, but the fact that they can make that profitable already, and then also they beat on margins, didn't they, KG? It seems like a pretty decent, little number there.
I'll have to look at the margin number. I have like literally 30 headlines that just came out from Tesla, so they gave a lot of updates when it came to their business. One that's notable for me is the new vehicles, or what they're saying is the new vehicles, their rollout, the cost reductions that they planned on having with that rollout, it's going to be a little bit less, right? So that's going to be an expense side headwind for them. That might be causing a little bit of turbulence. You're looking at FSD also in North America, looking at trying to reduce the price for that, trying to get more buyers into that particular product offering, also launching some free trials for everybody that has the ability to have it, right? So once again, focusing on that longer term vision of services, focusing on the longer term vision of AI. I'm not sure about the margin story, but this does appear to be mixed. When you start talking about expenses, cost reductions being a little bit less than what you thought,
right?
That's a problem.
It is a problem.
I'd like to hear that.
I think to your point, the forward look is not as encouraging as the trailing one. Right. Trailing gross margin 18%. She was expecting 17.4%. And I think that is the absolute most important metric for any auto company at this point, because Tesla, even with all it's doing, has been able to keep its margins on pace or better than Ford and GM, but it's kind of vacillated a little bit quarter to quarter the last couple quarters. The outlook coming up a little bit shy of the profit estimate, where they're saying they're going to report earnings of 52 cents a share. Well, that was the trailing that came in a little bit light. So again, it's kind of like, Diane, one of these things where, it's a little bit mixed. I don't know how the market's going to treat it. Right now, we're a little soft. It also could really, really change the way the market trades this based on how the event goes for Tesla and what kind of commentary comes alongside it.
It's true. I mean, investors want to hear more commentary about Robo-taxi. What does the road ahead look like? And, does the current valuation, is it justified, and kind of the future valuation justified based on its road ahead when it comes to the Robo-taxi, autonomous vehicles, and of course, you can't forget about the humanoid robot. And, Elon Musk has high expectations, some ridiculous expectations somewhere deep in the trillions on what he expects that to add to the company. It depends on how much you buy into the vision for the road ahead for Tesla, especially, because they claim that some of the impact in terms of what we're seeing in these numbers is because of the rollout of new vehicles. And it's hard to kind of say what's the justification for Tesla, and you have to be a believer in the future of Tesla.
100%. That's where I feel like the stock's going to be challenged here, because their snippet on Robo-taxi says timing of Robo-taxi deployment depends on technological, you see this, KG? Depends on technological advancement, regulatory approval. We are working vigorously. So no date, no further update. And if that's, how the stock got to where it is, then that could easily lead to some pressure on it, I think, if that's, why we went from $130 to $250.
This is the problem that we have. Right, so we have everything that's in writing about the outlook for the company, right? The vision for the company. We're going to get a conference call in about 30 minutes, maybe 45 minutes or so, and the commentary can be completely different. And that's exactly probably why the market's selling off a little bit. 2 weeks ago, 3 weeks ago, it sounded like Robo taxi was, at least for prototypes, were pretty much.
Yeah, we thought we were going to get him in August.
Yeah, and so now you're saying something a little bit different. Look, the company's had a good run, nice little bounce back to the upside. The energy business continues to thrive here. I think that's another bright spot for this company. But we always have to just we take the numbers, we digest the numbers, you get the commentary, the written commentary, you digest that, and then when Elon gets on the call, throw all that stuff out the window because you might come up with something new today and reverse the stock. And that just seems like you have to be prepared for that type of action if you're a shareholder in this name.
To your point on energy generation and the storage business, they did cite that as a major contributor to revenues because the profit on their EVs, boy, with all those with all the price cuts on their EVs, just a real drop off from this time a year ago. 45% lower the profit in the second quarter. So, that's what happens when you have to slash prices to keep demand going up.
Move inventory, exactly.
Yeah, exactly. Both in California, China too.
Mm-hmm. Yeah, exactly. You bring up the China picture, and that's one of the concerns that not a lot of attention has been paid to recently. The concern about tariffs and the impact to Tesla. That's a headwind for Tesla. Yes, they have some. The future story is what it seems like investors are betting on, but it has some current challenges and near-term challenges that it has to face as a current reality.
Yeah. Big difference between operating profit margin and the gross margin I cited earlier. Operating profit margin 6.3%. That was just shy of 10% a year ago. So you can really see where the autos are weighing on it. And that's, at the end of the day, it trades in these moments like a futuristic tech company, which I get because the past has told us Elon does get there eventually. But when you're looking at trailing numbers, it's a car company. When you slash prices on the cars you're selling, you're going to get slammed.
Yeah, well, they are increasing prices on certain models, right?
From here.
Last week or 2 weeks.
Right? Well, the last quarter, generally, they cut mostly, right?
For sure. Yeah, last quarter was a little difficult. We all
a little
know
rough.
That. We all know that. Look, once again, this is a name where you look for the forward vision, and that's what the market's been paying up for. Now, how long that's going to last remains to be seen, but I'm kind of right there with you. You're also going to have a number, and I don't have this number offhand, but it's usually looking at the gross margins x tax credits and other factors that they back out to. Gene Munster is really good at calculating that out. So I'm waiting to see that particular number because that, I believe they were looking at 16.8% for that particular margin number. We just don't have that yet. But, overall, I think it's going to be the vision moving forward. It's going to be the conference call, and the conference call can turn this thing around. Elon has been known to pull a rabbit or 8 out of
Right. Yeah, he's got a whole brood in there. All right. Thanks, Kevin Green, Dan Kinghall. Good assessment here of our big two companies.